Numbers hum where the cold winds blow. Trade winds shifting Schlossberg, Managing Director at BK Asset Management.
BK Asset Management's Kathy Lean.
Hello. Good morning, everyone. If you can hear me, see me, say hello, say good morning. Let me know that everything is coming through. Give me a thumbs up, say hello. Let me know everything is looking good, my friends. Let me know. I'm just in the process of getting organized here. But good morning, Mark. Good morning, Cheryl, Whitney. How do you download this song? I'll have to ask Boris because he created it. It's kind of an exclusive. I don't know, if we really want it to be downloaded, but it's a good tune, so maybe you guys can rock to it too. Hold on. It's an extraordinarily busy trading week, and I can't wait to get started on talking about it with all of you. But I created all these central bank tables, and so I'm just downloading it into this computer. In the meantime, let me know if you're brand new. Let me know if this is your first time on our Monday Market Buzz, because I always like to give those of you who are new some special attention, some special love. Make sure that we don't miss out on your questions, and we're covering everything that you want to learn about. Good morning, Nico, Iram, Laura, Adam. If you're new, just type in new into the channel. So I know that you haven't joined us before. And if you are new, welcome, Iram. This is a fantastic week to be joining us because we have so much to talk about. It is weeks like this where, the markets are really kicking. We, get a lot of volatility in the markets. And I think, today is a little bit of a test to that because we're kicking off the week with, one of the biggest or close to one of the biggest headlines that we're talking about. Just give me another minute to set up my charts and my screen, and we will kick off. Let me know, what you're trading. Are you in this pullback in gold? Are you riding the move in stock futures? Are you joining in the sell-off in the US dollar? Which ones are you trading? What you're trading? And let me know so that, I can make sure we talk about what's affecting the markets that you trade. All right, I think I'm fully organized here. And let me just adjust my chair a little bit. All right, welcome everyone to our Monday Market Buzz. And basically, this is the opportunity where we basically walk through all of the major events that will be affecting the markets in the coming week, affecting what you trade. I firmly believe my motto is that the markets reward the prepared. And my job is to make you prepared for this new trading week because you never want to be caught blindsided by some of the big events that are happening. You want to make sure what is expected in the markets because what actually ends up being the driver is going to be how the data, the central bank rate decisions compare to what the market thinks is going to happen. So we're going to talk about all that. We're going to talk about gold. We're going to talk about dollar, NQ, MNQ, all the things that you are trading. And what's really fun about our Monday sessions is that I kind of set you up for the trading week, and then we roll into live trading with Boris. So we're going to be live trading, gold, NASDAQ, around the market open. So there'll be plenty of opportunities to take what you've heard and turn it hopefully into some profits. So let's get started. And I love interactivity. And, so I'm going to ask you a couple questions as we get started. But, one of the main things that we have been watching is the tariffs, the trade wars, the US-China trade war. And over the weekend, I'm going to share with you my screen. Hold on. I'm going to share with you my screen. Share screen, entire screen. Wonderful. Here we go. Share screen. Okay, so I'm sharing with you a screen. Over the weekend on Sunday, I tweeted this. And I said, kicking off the week with the biggest news yet. I was out, doing Halloween activities with my kids, and this popped up on my phone. So I didn't have a chance to type it, so I got lazy, screenshotted it, but did share this information with you, which is that Chinese and US officials tentatively agreed to avert 100% tariffs, which, if true, would be a significant de-escalation of the volatile trade war. Now, that is single-handedly the reason why stock futures gapped up, or stock futures period gapped up, and is trading higher this morning. And yes, S&P futures are at fresh record highs. NASDAQ futures are also at fresh record highs, and the same can be seen in Dow futures. But what I want you to notice is that these are not huge gains. Except for maybe the NASDAQ, that's a pretty sizable move. But for the most part, I would describe this as cautious optimism. Would you agree? Type in agree, or nope, this is bull market going strong. You can write that too. What do you think? I kind of see this as cautious optimism, particularly if you look at this Dow futures chart where the candle's kind of red, not green. I mean, what we want to do is want to gap higher with a candle like this. Wouldn't that be great? But that is not necessarily what we see today. It's kind of cautious optimism. S&P futures are up 50 points. NASDAQ is up strongly because, all of this with the rare earth metals and things like that is very, very bullish for tech stocks. But the markets are kind of cautious. Many of you are agreeing that that's the case. I'm actually streaming on Instagram for the first time today. I finally figured it out. And I see many of you there also agreeing. Why? Why are we not seeing a huge candle like this? Why are we seeing this cautious optimism, which many of you seem to agree? And as my good friend who is so smart in commenting, Bob, says, smart people would be cautious because, yes, Trump is out there. He's in Asia, and he actually has reached some trade agreements with other Asian nations like Thailand, Cambodia, Vietnam, Malaysia. He has basically reached an agreement to exempt tariffs on some key exports for those countries. So we're starting off strong. He's out there. He's making trade deals. He's starting off strong. However, China's really the key, right? China's the big question mark. China's the one that's really been pushing back. China's really been the one that's been resisting. So the big meeting between Trump and Xi is not until Friday. And so, a lot can go right, a lot can go wrong between now and then. Now, it seems, and the reason why, I put this headline popped up on my news feed and then kind of filtered through everything is because Chinese officials, the people who actually do the work, are behind the scenes having negotiations on what they could, agree on. And so it seems like progress is being made. And one of the greatest risks is this 100% tariffs, but that's not the only thing. The other thing is that the tariffs that have been paused the pause was supposed to end next week, I believe. And so, Trump and Xi also have to talk and agree and see whether or not, the 100% tariffs and those tariffs will continue to be paused. So far, the signs suggest that they are. But there are also headlines out there that say that nothing is done until it's done. I am sure all of you will agree with me that nothing is done until it's done, until it's officially announced by President Trump. And that is why the markets are cautious, because it can go either way. And even if Trump agrees, China might push back. Just like in this latest phase of the drama, it seems like the U.S. was okay with everything, and then China came out and started to restrict rare earth metals, take some more harsher initiatives, really angered Trump, who came out with a 100% tariff threat. So either side could escalate tensions. And that is why we're seeing cautious optimism. Either side could change their minds. And I think, as our good friend Bob pointed out, smart people would be cautious because it's not done until it's done. And even when it's done, we don't know if it's really done. So we are seeing stock futures up today, but they're not up as much as I would like. I would like to see everything up 1.5% or more. I would like to see Dow futures up more. But we are stepping into this new trading week with what we call risk on, meaning that The markets are optimistic. Traders are taking on risk. They're buying stocks, they're buying currencies. And that is why we're seeing euro up. That is why we're seeing, dollar yen down. Now, many of people may think, okay, no, tariffs being delayed, which should be good for the U.S. economy. It should be good for Americans. But if you join me in the past, you will know that tariff announcements is actually good for the dollar, and tariff delays is bad for the dollar. And the reason for that is because investors see this as more positive for the rest of the world. It kind of takes some of the barriers or uncertainties of growth away from other corners of the world, which is why euro is up, pound is up, Kiwi is up, Aussie is up. But once again, is this a big move? I'll ask you, is this move in euro a big move today? I am sure most of you will say no. This is a very, very small move. And this is a surprisingly small move in a week where the Federal Reserve is expected to cut interest rates. The European Central Bank is not expected to cut interest rates. So one's not expected to cut, the other is expected to cut. So, if we think, okay, ECB, no cut. Fed, almost guaranteed 25 basis point cut. This should be very positive for the euro dollar, right? And yet euro, is barely up. And over the past 4 days is barely up. So this is not really a positive move. Another sign of cautious optimism. Now, many of you are trading gold. I'm getting some gold comments on Instagram. It says, I wouldn't be surprised if gold keeps going up either, to be honest. Okay, gold had this huge pullback last week. We have been talking throughout last week what could cause a turn in gold. And, Boris and I were in BOC, and many people asked this question. And I said, what could cause a turn in gold is some of the factors that were driving gold higher, basically changing. And one of those things is the tariffs and the trade war. Now, we cannot say that it's changed, which is why, once again, cautiousness is warranted, because anything can change between now and the end of the week, between now even next week. But for now, it seems like progress is being made. Seems like there's hope that the tariffs on China will not, the 100% tariffs will not hit. So as a result, gold is down, but, almost 2%, which is a decent move. But, if they were truly paused and eliminated, or just paused, I doubt they'll be eliminated. We'd be getting a candle more like this and not a candle like this. So the question that many, many of you, I'm sure, is wondering, is this a pause before further losses? Is this a good buying opportunity? Well, first and foremost, there's obviously a clear support level over here, marked by last week's low, a clear support level. And if we bring in some of my favorite moving averages, if we just bring in, okay, let's get our EMAs out here. If we bring in the EMAs and we pop on the 21 EMA and that's pretty much where we are at right now. So 21 EMA, we can change this to the 8. You will see that we're close below the 8 EMA for the first time since August. Now, the reason why I'm bringing in technicals is because fundamentals drive the story. Fundamentals drive the outlook. Fundamentals determine whether we break or not. Technicals give you the buys and sell signals and give you the entry and exit points and the frame of reference. So you can see here that the 21 EMA, we're kind of testing it. We haven't quite broken it. And just to smooth things out a bit, we're just going to add on the 20 SMA just to see where we are at on that front. But you can see that with this, we are at a pretty interesting point, because if we do close below, and it's no coincidence that this is right at 4,000, and if we get a close below the 21 EMA and a close below 4,000, then we could see a much more significant pullback in gold. However, if we hold it it will still be more of a buying opportunity than anything else. Also, bringing in some of our fibs. It's no coincidence these spike lows, 38.2% fib, 39, pretty much right around 39.47, just underneath 39.40, I'll just say 39.45. That's really where I think is the uncle point. We've got fib here, we've got these lows here. So what I think is that we'll still be an uptrend if we come down to a correction here. In some ways, we can still be, when gold corrects can be very sharp. And this is where the fibs come in and they're so important. But for now, the uptrend is still holding because we have cautious optimism. But if we do get this trade deal done, we're going to come down here and then we'll have to see whether we break or not. And that's really, the prospect of gold. Right now, taking a look at this picture, gold is not, in a bear market in any way, shape, or form. We haven't moved into that yet. Gold, in many ways, you can still argue, is a buy. So we would need to drop much more below that. And, a lot of the other factors haven't changed because we say, what is driving gold higher? Number one, trade tariffs, possibly having an improvement, but we are not so sure about that. U.S. government shutdown, still shut down, but, maybe we could reopen this week. If the U.S. reopens this week, that would be good news. But if it doesn't, ongoing troubles. Central bank diversification. That's not going to change. These central banks will continue to want to diversify. Fed interest rate cuts. Fed still cutting interest rates, probably with more to come. And then U.S. dollar weakness, which for the time being still seems to be the case. So when we ask ourselves, is this pullback in gold durable? The answer to the question lies in whether or not these factors that we have outlined have changed, whether or not there's been improvement in the trade war, whether or not the U.S. government is still shut down, whether or not the central bank diversification is going to continue to happen, whether or not the Fed is going to cut interest rates and do more, and whether or not we see U.S. dollar weakness. And so I think many of you will agree with me that so far, there's hope that these things will change or has changed, but I don't think that, any of us feel, and, give me a thumbs up if you agree with me, I don't think that any of us feel confident that these have changed enough to say that the gold rally is over. But at any point in time, number one, which is the primary source of this gold rally and could change dramatically. If number one changes, number four is probably going to change. And number five is going to change as well. So it's kind of like a slippery slope, but in a good way in a good way, depending upon whether you're long or good gold, but in a good way for society in general. If 1, 4, and 5, one changes, and then leading to the Fed cutting less, leading to the dollar not weakening as much. So all of that is important factors. All right, some other things, my friends. We have, so this is going to be front and center this week. Friday, Asia, which is pretty much Thursday night in New York, and Trump and Xi are meeting. So watch for headlines. Friday's going to be a crazy day. There's going to be a lot of movement happening. We also have, aside from this, 4 central bank interest rate decisions. We have the Federal Reserve, the Bank of Japan, the European Central Bank, and the Bank of Canada. Now, let's take a look at what the market is pricing in. So whenever we look at the Federal Reserve rate decision, we think about what is pricing in. We look at the CME Fed Fund Futures. So we go to CME Fed Fund Futures and we click on, all right, I got to put this on do not, I don't know, this is on do not disturb. Okay, do not disturb me for the next hour. Okay, 30-day Fed Fund Futures. Actually, we're going to go here, Fed Watch. So whenever you see on TV or you read on Bloomberg, Market Watch, CNBC, the market is pricing in X amount of interest rate cuts. Market is pricing in 100% interest rate cuts. Where is that? Where are they seeing this? They are seeing this by going to the CME Fed Fund Futures. Going to the CME Fed Fund Futures, and they're looking at this very thing that we're looking at together. So what we're looking at is, you can see here that you can see here that we basically have the market for the October meeting, which is this week's meeting, pricing in current interest rates of 4 to 4.25%, 96.7% chance of an interest rate cut. There is a small chance that's going to remain unchanged, but not really. This is really not changed in the past week. And in the past month, the odds have shifted in favor of a 25 basis point rate cut. And that's why it's pretty much guaranteed. December is I think two old men in a fist fight is not going to look pretty. I don't think it's going to work out for either one of them. But that's very funny there. December. Okay, we're at 4 to 4.25%. If we imagine that the Fed is going to cut interest rates by 25 basis points this week, that's going to bring rates to 3.75%. So the market is pricing in a 95.8% chance that we'll get one more interest rate cut in December. So this is very important. The market is not looking for 2 interest rate cuts in December. The market is looking for 1 25 basis point cut in October, 1 in December. Some people are talking about 50 basis points. This is not priced in the market at all. So if for whatever reason, Powell suggests this week in his press conference that, okay, we've cut interest rates and we feel like we need to do more. We need to be aggressive. The government shut down, the economy is weakening, the labor market is weak, and, things are not going well. And if you look at the latest inflation report, prices are lower. If any of these things he says happens, then the odds will shift for 50 basis points. And that it will be a surprise. That will lead to a sell-off in the dollar, a rally in stocks, as well as, probably, some decent moves in gold as well. But if it is status quo and the market is, and another Moon's right, one of the reasons why he may not do that is because corporate earnings have actually been fantastic, believe it or not. So if Powell just tells us that we are going to get 25 basis point rate cut, and sounds kind of wishy-washy about the next interest rate cut in December, that's probably going to lift the dollar, and that's probably going to pull stocks down and probably pull gold down as well. Now, this week's meeting is not like the September meeting or the December meeting. The September meeting and the December meetings where we get economic projections, we get the dot plot, we get a whole bunch of different stuff. And so there's a lot going on in September and December. In October, we don't get any of that. We don't get updated dot plot. We don't get updated anything. And so it's just going to be a rate decision. It's just going to be the press conference. Now, whenever we have rate decisions, I love to build these beautiful tables for you. See if I can find the Fed table. Okay, these beautiful tables to let you get a sense of whether or not, where to go? Let you get a sense of whether or not, you can look at my C order here.
Nice.
All right, I'm gonna have to pull it up again. 1 second. I think when it clicked on it, it disappeared. But I love to build these beautiful tables that show you how the economy has changed from one meeting to the next. Now, unfortunately, we do not have the liberty. This is Japan. Let's see if we can find US. We do not get, that's Canada, which we'll all go over. This is the US. Okay, this is what we want. All right. This is, it's just automatic. I have no idea what they show me. Sometimes it's an otter. Sometimes it's a beautiful beach. It is. I didn't even know the otter was there. But I put together these tables which show you how the economy has changed since the last meeting. So just wild guess, just taking a look at this table, do you think there's been more improvement or deterioration since the last meeting in September? I want to hear from you what you think. Since Boris, since you're staring at this, and you want to join in.
I have a question for you. I mean, I think a lot of people started to question the idea of any further rate cuts, given how strong corporate earnings are. I mean, the economy itself is really blazing hot. I mean, I guess
So what are you trying to say? Are you trying to say no rate cuts this week?
No, I'm saying there's going to be a rate cut. I just think going forward, he's going to be a lot more cautious about he's going to be a lot more wishy-washy about promising any further rate cuts. It's going to do his data-dependent thing. But I think ultimately the data-dependent thing is going to depend pretty much on the unemployment picture. If employment remains at all positive, it's going to be really hard for him to make an argument for further rate cuts, given how strong the economy is doing. So I think this might be the final one. I know the market doesn't think it's the final one for the year.
So you think this is going to be the final rate cut?
For the
I think
year.
I could wager to you that this
For
will
the
not
year.
be the final rate cut, period.
Not period, but for the year. Like I don't think he's going to do any more in 2020.
Should we predict Boris put the money on this? Who agrees with
do it.
Boris? I want
We
to
can-
see who agrees with Boris. You know, give him a fist bump if you agree with Boris that
I'll do
October-
I'll do a quick poll. Let's see what everybody else thinks.
If you think October will be the last rate cut this year and the Fed is going to pause in September, you know, give Boris a fist bump. If you disagree like me, you can say no. You know, up to you. Let's hear. I want to hear you.
All right, I'm gonna
Putting
start
money
a
on
poll.
it is what we do all day. Dame Damila agrees with you.
Go ahead, guys. Vote in the poll. I'd love to see
Where's this poll? I don't see a poll.
I put it up in-
You know, I don't even know what I'm looking at. But you can tell. You can look for the
it's in
poll later
chat.
on.
Yeah, it's in chat.
Okay, taking a look at this table. Taking a look at this table, I agree with many of you, which is that, you know, it's really hard to tell. It's mixed, right? Retail sales is up, consumer sentiment is down, job growth is weak. But we didn't have the most recent reports. These reports are delayed, but we did get new numbers since September. Consumer prices are lower, but producer prices are up, and even consumer prices, even though it's lower, is at 3%, which is really high.
I will make one caveat, though. I will make one caveat to my prediction. If the shutdown goes to Christmas, I think that's going to have serious impact on the U.S. economy. And then, yes, he's going to have to cut rates. But that's a.
But Boris, I mean, the Fed
Okay.
meeting's December 9 to 10, which is like 3 weeks before Christmas. So how does that happen?
Well, I'm assuming that they're not gonna go through all of November, not
So
paying.
I mean, they can't go through
government.
Christmas. The Fed won't have at their. I mean, the Fed meeting happens way before Christmas.
No, yeah, but I'm saying what I'm basically saying is if shutdown goes all the way through November, then yes, the Fed is going to would have to consider, because it's a completely different story. There's already reports that they have to shut down some flights to LAX because they don't have enough air traffic controllers to be able to pay them. I mean, we're getting entry a level here where it's going to break the U.S. economy just from its simple, basic functioning factors. So yeah, I think this is the one existential factor that I think is, which is outside of any economic activity, that I think could be a big risk for the markets, because they have to, just for the simple idea of being able to do normal business, day-to-day business, come up with a solution for the government shutdown.
So I think we would have to say basically to Thanksgiving, and then I'll give you Black Friday and Cyber Monday.
Right.
So
right.
pretty much after Cyber Monday, and we get the sales from Black Friday and Cyber Monday, the decision in many ways will be made. If the shutdown continues to Thanksgiving and the Black Friday and Cyber Monday sales
I think
are
the game
terrible,
changes. Right. Then the game is a different game then. Yeah.
but if the government is reopened and Black Friday and Cyber Monday sales are cooking, maybe Boris could be right. And, you know, maybe spending could be, I mean, retail sales last period, I mean, although this is very delayed data, because we're not getting the September data at all. But, you know, the earnings are good, stocks are strong, maybe people will keep spending. We'll have to see. But as my friend here, Ben, says, food stamps won't be paid. Not sure if it'll continue. I mean, I think it's like 1.4 million Americans didn't get their last paycheck. So it's going to hurt.
That's a very big chunk of, remember, U.S. is this consumer economy. Yeah, 1.4 million is in a population of 120, 130 working million adults. Not that big, but it's big enough that it's going to have an impact. I just think it's going to have lots of reverberations, not just from the immediate government employees, but every other business they support and every other business that depends on government services. Airlines is just, of course, the most obvious one, but transportation, EPA, all sorts of stuff is contingent I mean, government is 25% of the U.S. economy. You can't just simply turn it off and expect the U.S. economy to function. So anyways, that's
as
my
Stanley said, if there is no cut, markets will certainly come crashing down because the market has priced in more than just October and December. They priced more rate cuts. The Fed themselves in the dot plot had predicted two more this year, and then one in next year, which I think may be under predicting. But we'll have to see. We'll have to see how things fare. But like many of you said, so far this table looks mixed. And, a lot of this data is delayed, and we're not going to get more data if the government remains shut down. But what we have to rest on is that, so far it seems like there's been more weakness than strength. And, at least one interest rate cut is definitely due this week. And this week, it's not going to be the actual interest rate move. That's the most important thing to realize. Trading the Federal Reserve rate decision is a two-pronged trade. You've got first the Federal Reserve rate decision. Where's my this? You got first the Federal Reserve interest rate decision at 2 p.m. and then you've got the press conference at 2:30. So sometimes when we get the dot plot, 2 p.m. is a real great time to trade, and we've got a lot of excitement, a lot of volatility, a lot of action. But this month it's not going to be the case. This month, this is going to be a given. 25 basis points. If they suddenly do nothing, that will be the biggest surprise in the world. And it's impossible in my opinion. But that's where knowing where the market sentiment is so important. The market is so skewed towards expecting this 25 basis point rate cut. If it's more is done, if less is done, that's going to be the surprise. But as traders, what do? As traders, the real opportunity is going to come from the press conference. Usually when we have the press conference from the Fed, whatever that is important that he wants to say is going to be said in the first 15 minutes, including the questions that are being asked by the reporters. So anything important that's going to come out of it that you should know should be told to you, and the market should know about and be pricing in by 2:45. And after 2:45 is when we get the real trade, when we really know what he wants us to take away, which is, they're still data dependent, they're wishy-washy, or they're committed to do more. And then that's where we have the opportunity to trade. Now, BK traders, of course, that I don't trade till the Asia session because we're going to let the market digest the whole thing, and then we're going to trade the Asia session. Now, the board sometimes likes to trade the Fed rate decision. I'm not sure if you have any.
We'll definitely be trading the Fed rate decision. Oh yeah, the last hour of the market, it's very exciting. Lots of volatility. Gold is going to go. I mean, there's going to be a lot of opportunity. We're definitely going to do it.
Okay, so make sure you guys join us on Wednesday around the rate decision on X, on YouTube. Join us. We're going to be trading NASDAQ and gold around the rate decision because the last hour trading, like Boris says, can be a very, very exciting one. All right, Fed is expected to cut interest rates. We also have the Bank of Canada. The Bank of Canada is also expected to cut interest rates. Let's see what's going on in Canada. All right. This is Canada. So Canada, if we look at Canada here, you will see that kind of looks like it's mixed as well, with maybe a tinge more red than green. So kind of looks like it's mixed. Retail sales, headline number was good, but core and year over year is not good. Job growth is really, really strong, but it seems like the Canadians are downplaying the improvement in job growth. Inflation data was mixed, but the year-over-year rate is really, really hot. Housing market deteriorating, GDP numbers weakening. I mean, it's not really all that bad, in my opinion. Of course, on Friday, we learned that the trade talks between the U.S. and Canada were halted. So that's definitely not good news. But this morning, the headlines show that Canada says they want to talk, and they're ready to talk. So it's still kind of uncertain. Now, if we were the Bank of Canada, and the reason why I show you these tables is that I want to teach you how to learn how to put on your central banker cap. If you were the Bank of Canada, and you have already cut interest rates quite a bit this year, and you're nearing the end of your easing cycle. I think there's a bit of an echo, Boris. If you don't, let me mute you. You're nearing the end of your easing cycle. Chances are you're going to cut interest rates and then, be non-committal. Basically, not commit to any type of additional interest rate cut moves. And that is part of the reason why, where's my chart? Dollar CAD is strengthening. Sorry, CAD is strengthening. Dollar CAD is weakening because the market is already discounted the BOC interest rate cut. And and the real question is, when it comes to interest rates, it's not what the central bank does. It's what they plan to do in the future. So if the Fed cuts interest rates and plans to do more, and the Bank of Canada cuts interest rates and indicates that they're pretty much done, then, that is actually negative dollar CAD, not positive. So for the time being, you can clearly see dollar CAD is consolidating. This is a huge week for dollar CAD. But if we do get a break to the downside, we're sitting at pretty precarious levels. If we do get a break to the downside, it's going to be a very, very significant break. We also have two other interest rate decisions. The Bank of Japan. Where are we in Japan? The Bank of Japan. Now, in the beginning of the year, even 6 months ago, even 3 months ago, everyone's talking about how the Bank of Japan is the only central bank that could raise interest rates this year. But they've moved very, very far away from that. Taking a look at this table, and I didn't update this one, it should say bearish, but taking a look at this table, you can see also that there's probably just as much red as there's green, indicating there's probably just as much improvement as deterioration in the Japanese economy since the last central bank meeting. So if there's been just as much improvement as deterioration in the economy since the last central bank meeting, then that tells you that the BOJ is probably not going to cut interest rates. In fact, the market does not think that the central bank is going to cut interest rates at all. This is also the beginning of the new prime minister's term. And the thing with this new prime minister is that she favors easy or more generous, fluid, liquid, whatever word you want to use, fiscal and monetary policy. So she's going to take steps that's going to weaken the yen on a fiscal perspective, and she's probably going to strong arm, encourage the BOJ to keep monetary policy easy as well. And, pretty much for good reasons, because retail sales has been kind of mixed. Labor market you see up in the second level is kind of mixed. Inflation is moving lower, not higher. Sentiment is actually improving. Eco watchers, consumer confidence, Tankan, those are improving. Activity, this should say negative, bearish. All the activity is weak though. So, there is no reason for the BOJ to raise interest rates, which is why the yen is weak, which is why the yen is an easy sell unless you have risk aversion, unless you have panic mode in the markets. So,
Okay. A question for you. Don't you think she's sort of Trump light? I mean, she seems to be following very much, Trumpian policies of expansionary fiscal policy, loose monetary policy, populist policies.
Isn't that what I just said?
Yeah. I'm just, I
said
just
it's easy fiscal policy, easy monetary policy.
Right. But she seems to be following Trump's playbook. It seems like there's a lot of leaders. The world is kind of dividing into anti-Trump, pro-Trump type of, policy base. And it's going to be interesting to see how it plays out. But she seems to be obviously following his path. So it's sort of interesting.
There is no question that her policies are, expansionary, which is why when it was first announced that she blew out that election, the move was yen weakness. Yeah. And so we are just seeing all of this continue to play out in the same way, which is yen weakness. So yes, that is it.
I guess it'll be interesting to see in 2026 if that yen weakness persists. Which crosses will be the performing best against it in terms of strength. Whether it be euro yen.
We'll see. The future is always interesting, right?
Yeah.
So we will see.
Yeah.
Oh, you need your central bank song. I don't know if we could, the music is loud. I love the central bank song. Okay, last one, ECB, European Central Bank. Like the Bank of Japan, the European Central Bank is not expected to change interest rates. They're pretty much done. Of course, no one's ever really done, because in this type of world, because, political policies are creating dramatic uncertainties. But for the time being, they seem to be done. I mean, I'm sure they feel kind of stiffed, right? Because, China restricted rare earth metals, And then the US came out with its 100% tariff threat. And then I would guess, and I think it would be a good guess, that Trump strong arms the EU to do the same, because the timing of that announcement was exactly the same, where they both had restrictions on China. And they probably feel stiffed that the U.S. Trump is now, reaching an agreement with China, whereas they are working on more restrictions. So we'll have to see. But data's been okay. We had PMIs released on Friday. PMIs are some of the most important pieces of economic data because they tell us what is happening right now. PMIs are for October. A lot of times when we get data, it's for September, the month before, or 2 months before, so it's like super dated. But PMIs is the most current data that we get. So the Euro PMI down here was bullish. The German PMI was bullish. The Eurozone services PMI was bullish. So PMIs aren't doing bad. This morning, I didn't update this morning, but this morning the IFO was great. It would beat expectations as well. So data from the Eurozone hasn't been bad. German retail sales down a little bit, but still a lot better than the previous month. Same thing as Eurozone retail sales. Labor market conditions are weakening a little bit, which is great, but inflation, which is probably the Europeans' primary focus, is up. So for the most part, things in the Eurozone is actually improving and more resilient than some other parts of the world. So it reinforces and validates the ECB's plans to leave interest rates unchanged. Now, some of you are saying there's been a lot of downgrades. Yeah, there have been a lot of downgrades. But some of these downgrades are matching some of the other downgrades that were happening before. Definitely a little bit of a problem. I'm not saying that they're out of my radar. I'm definitely watching them. But for the time being, I'm also watching data. And data has not been that terrible. And all of it reinforces ECB leaving interest rates unchanged, pretty comfortable with where things at, whereas other central banks like the Fed is moving interest rates lower. So we've got 4 central bank rate decisions this week. My heat map is got neutral all around for the most part because I don't know why these cards didn't update. They should be neutral all around. I'm going to update it. It should be neutral all around because we're waiting. We're waiting to see what the Fed says. We're waiting to see, how everything plays out. And there's a lot of, big events on the calendar. Aside from those 4 interest rate decisions, here are some of the other things you need to pay attention to. Now, the biggest mover today is the Australian dollar. The Australian dollar is up a lot because we had comments from the RBA governor yesterday, and she basically said that she was less dovish. She downplayed the weakness in the Australian jobs report. She expressed concerns about inflation. Inflation is coming out this week. You can see the market thinks that inflation is going to go up. The market thinks that inflation year over year is going to go from 3 to 3.1. Anything in the 3s is a problem in general for any central bank. So she's less dovish. The Aussie's up a lot. If this becomes a hot number, we're going to see more recovery in Aussie. It's going to be a really good trade this week. U.S. got consumer confidence. It's a conference board report, so I think it'll maybe released. Wednesday, we have the Bank of Canada rate decision. Nothing really from Europe, but with the Bank of Canada rate decision, with the Federal Reserve rate decision, both are expected to cut interest rates. CAD yen will be a very interesting trade on Wednesday. Then we get a BOJ rate decision in the evening, so that's going to be fun as well. On Thursday, we get a little bit of focus on the Eurozone. We have the GDP numbers, the flash Q3 GDP numbers for Eurozone, Germany, France, Eurozone in general. That's going to be very, very important. You can see market thinks Eurozone GDP is pretty much going to be flat. They think German GDP is going to rebound to steady after falling the previous month. French numbers, as my friend Fred pointed out, they've got a downgrade. So they're probably so the market's looking for weaker GDP growth. Germany also has jobs report, so Thursday morning is going to be all about ECB. And Fed fallout because we've got the ECB rate decision. Euro is going to be in play on Thursday. And then Thursday evening, we have Japanese data dump, the Japanese inflation data, jobs report, industrial production. And then Thursday night is when we have Xi and Trump meeting. And then we also have the week ending with inflation data from the Eurozone and Chicago PMI. Someone earlier asked me, will the PCE deflator be released? You can see it's not on this calendar. It will not be released. we do not have indication that PCE will be released on Friday. So it is not expected at this time. Even if the government reopens, I don't think it's just suddenly going to come back on the calendar. I think they have to go back, the people have to go back to work. They have to recrunch their numbers. They'll probably set new dates for the data to be released. I'll do my best to try to keep you all updated on that. But that's the focus, the 4 interest rate decisions, Trump's visit in China, and how all of that plays out. Now, in terms of price action, you can see, euro is basically, just kind of consolidating. And, it's rejecting the 21 EMA. It's bouncing up. If it goes above it, we can see a more open move. And even if you drew your trend lines, you will see that we've got, some nice resistance, coming up right around these levels here. So, it's itching for a breakout. Euro is itching for a breakout. Triangle getting narrower and narrower. And the break that happens, there's a lot of catalysts for the breaks. The break that happens could be very strong. You want to trade the break, or you want to wait for the break, and then you wait for a correction to make sure it's confirmed, and then continuation. Dollar yen, very, very strong. Dollar yen near its strongest level we've seen dollar yen since February. So really, really strong levels in dollar yen, but, cautious candles. Got a little bit of what looks like a cup and handle formation here. Cup, handle, I don't know where my free draw tool is, but we've got what looks like, let's do a highlight. We've got a really nice, are we highlighting? Oh, here. Cup, handle. So, maybe we'll break out to the upside. We'll have to see, but there's a lot going on from the yen perspective. The yen will probably remain weak, but from the dollar perspective, that's the real story, right? Will this cup and handle formation actually continue? And I don't think we're going to get a breakout until, of course, if Trump suddenly pre-announces before their meeting at the end of the week, and the end of the meeting becomes nothing more than a pat ourselves in the back meeting, then we could get the rally in dollar yen. But you never know what's going to be announced. Pound dollar, UK data hasn't been great. Pound has been kind of weak. We've got, pretty good trend line resistance, in pound dollar. You got a little bit of signs of a rolling up here, but we're still in a downtrend. Pounds overall in a downtrend, and that will remain intact until fundamentals change. Got a lot of big events this week that could change the fundamentals. Dollar CAD, you can see is we drew this this support level. Right now we're in a downtrend. We're watching to see whether or not the support level breaks. And you can see that, it definitely looks like it kind of wants to move to the downside. For me, if we look at our zip, you could see that, I don't know why my indicators are so slow in pulling up today, but you will see that if we do put the zip comes up, dollar CAD is definitely, kind of in our sell zone territory right now. All right, what else? Kiwi. Yeah, none of my indicators are pulling up for some reason. Kiwi is rolling upwards. Hold on. What is it, Boris? You're muted, Boris.
Trading view is very, very slow on the market open. That's why it always happens that way.
Okay. Kiwi rolling upwards. No big news from Kiwi today. So, we're rolling upwards. Looks, oh, here we go. Looks a little bit more bullish than bearish. And, I don't want my zip anymore, but more bullish and bearish, and does look like it wants to continue to move higher. Kiwi does not have anything going on. This is good news. Aussie gapped higher on bullish comments. Gaps often are filled, so we'll have to see. But the longer and starting to move downwards, gaps are filled often. Almost always, in my opinion. So I think there's a good chance we're going to at least come down to here to test that level. Maybe even come down to this region over here before we rebound upwards. So Aussie definitely looking like it's losing some momentum and looking like, this gap here wants to be filled. We have the inflation report, like I said. So overall, I'm still bullish Aussies. I really like the way it's looking on the daily chart. I really like, let me move this, let me get rid of this. I really like the breakout to the upside, but I do think it could test the breakout, the gap before moving back up. So tactics will be very important. Just buying now is not a good idea just because it's moving upwards. And then lastly, dollar Swiss, nothing going on here, just consolidating, probably the most boring pair to trade. And it's just waiting for its news. Technically, if you're trading NASDAQ, you'll see, new highs in NASDAQ and gold. These were fibs that we were looking at earlier. We already went through our tech levels for gold. So you can review the video there. But the market's opening. So I'll take questions. Boris is here. He's ready to rock and roll with live trading with you. And let's see what's going on. And we are seeing, equities drop at the open. Let's see. Let's get this. We are seeing equities drop at the open. And this, my friends, is what we call cautious optimism. Exactly what I've been kind of warning you about all morning. Because the markets reward the prepared, and you're all here and listening to me because you know the value of being prepared for the trading week. So, hopefully this helps you for your week. Boris, you there? Boris, I can't hear you. You're muted again.
I muted myself. Yeah, I'm just nursing a trade. Let me know when you're done, and I'll take over. Okay, so let me put my screen up. Hang on a second, guys. All right, I finally got the perfect layout that I want for you guys, which is like I now have TradeView, Wealth Charts, TradeView, and Twitter, all looking perfectly in one perfect little window. So you guys could actually see my activity. This is my activity today in trading gold. I'm trading gold on TradingView, TradeView, right? Those accounts. And I'm trading NASDAQ right now, getting my ass kicked because, as you guys know, I should never be trading the open, but I couldn't help myself. This is the do as I say, not as I do part of the show, and I'm probably going to get faced on this NASDAQ whip. But you can really see how I basically aligned all of our accounts, all of the positions, and all of the charts into really beautiful one single view, so I can totally switch around. More importantly, we can now be able to follow both NASDAQ and gold on the same chart off TradingView, which is really going to be helpful because we can switch around to make trades in wealth charts once we get into any kind of a signal on NASDAQ. But more importantly, I really have zoned in and honed in on how I want to manage all of my trading accounts, how I run all of my scalps. And as always, this is just my way of doing the structure. Your way does not have to be my way because I'm doing it to my personality. Remember, the key thing to how we trade is we use the absolutely incredibly valuable BFF dots indicator and optimize it to our own personality. So I'm going to show you like a really big swing trade I made using BFF dots, which I hated. Like I made a lot of money in that trade and I hated that trade because it's just not my personality. And you guys could totally benefit from that if you have the personality to hold a position longer than 5 seconds like I do. But the beauty is that, we can make it anything we want it to be because the indicator itself is the real value that that all of us trade. So good morning, everybody. Good morning, good morning, good morning. How we doing? Everybody's saying thank you to Kay. Okay. So if you ended up, this is expected. Okay, remove. Okay, K is gone. Remove. Okay. Save changes. All right, guys, just give me a yes, you hear me. Yes, you see me. Everything is good. I just want to make sure. I want to make sure the stream is fine. Okay, because Kay just killed her Insta stream and it helped me. Let me see if I got killed on my thing. Yes, I did. I got stopped on my NASDAQ and deservedly so because that was a stupid ass trade on the open. Anyways, let's look at what I want to do today with you guys. Let me see what we got here. Get rid of the comments. back to sneezing. So just par for the course. All right. Here's what I'm going to show you. I'm definitely going to go long NASDAQ here. I'm going to explain to you why in just 1 second. Let's go long. Let's just go buy market. I don't even I don't even care. I'm going to go buy market. I'm going to show you why off of the trading view chart, just to kind of give you a clean idea. Let me see if this is going to work, first of all. We're like looking at the 48 as my position. Is this going to work? Hopefully. No, it went super close to my target and kind of died out. Anyways, why I like this trade, I'm going to show you the exact reasons what I've been doing. Although NASDAQ is just, this NASDAQ is going to probably kill me on this account because it's really going against my structure. Everything I'm doing with BFF dots, which basically show us optimal points of momentum, and I'm trying to trade mostly momentum with trend, but occasionally momentum with counter trend, is based on the idea of buying and selling flows at the earliest times. Now, what's happening right now with NASDAQ, by the way, is this is what you're seeing, this price action of fake out here, fake out here, fake out here, is absolute toxicity for me. And my next order of business, if this NASDAQ trade fails, is to leave this fucking instrument 100% alone, like it's a radioactive piece of turd on the streets of New York City, until we actually start to see pull away candles, until we start to see candles that show us any kind of momentum pulling away from the moving average. As long as it sticks to moving average, like, dog shit on a New York City street, we should not be trading this. This is, in fact, by the way, the shittiest fucking environment for this, as I'm looking at this much more carefully with a critical eye. So this last trade that I did, this is, was basically this green dot, positive green momentum. Let's hope we get continuity move. And it totally, I think, blew me. I don't know if it blew me out. I may still be in the trade. I'm still in the trade, holding on against all hope. But if this doesn't work, this is a really, really shitty environment, and we don't trade it at all. We don't trade it at all. Now, contrast that to the really beautiful environment in gold, where you have lots and lots of continuity and lots of continuity the other way, and a lot of extension of price. And gold has just been, this is why gold has been money for me, money all day long. And that's so important. And that's why the dots indicator is so valuable to us, because not only does it tell you, the great entry points of when to trade, but it tells you when it's really stupid to do anything. And this is, in NASDAQ right now, the absolute shittiest time to trade, like for what we do, because we're always betting on the idea, buy high, it's going to go higher, sell low, it's going to go lower. And if it's just simply bouncing up and down, like a, like, I don't know, like a yo-yo, it's absolute toxicity for us. Now, and as I said, we have a prescription for it. The whole idea is you simply wait until you actually see a modicum of momentum. And if you don't see any momentum, that means there's nothing to do. If this stays like this for the next 3 hours, good, let it be. We'll leave NASDAQ alone and not touch it. There's clearly 1,000 better opportunities in gold right now than NASDAQ. Speaking of, by the way, I tweeted this out today, and this is why gold is the trade today, and NASDAQ is just useless as an instrument. It's starting to pick up a little bit now, but just to give you an idea, in Asia, well, even now with gold, you could really see like how much better volatility it is. So NASDAQ last 10 bar average is about 27 points, right? Gold is about 9 points, right? However, and this is what you need to appreciate, NASDAQ is six times the size of gold notionally. It's a $25,000 product against a $4,000 product. So think about that. You're only twice, maybe three times, barely three times as wide in range against gold. given your notional thing. So it's actually incredibly less volatile than gold, and therefore less tradable than gold. There was a point in Asia where gold was 5 on a 10 bar range, and NASDAQ was 5. And it was a 6 times as big a product. So you can imagine how much better gold is as a product than NASDAQ. And this is one of the great things about DOTS, is that it tells you not just the entry points and the momentum points, but also the volatility signatures of the instruments. So you can make decisions in real time as you're doing it. Hopefully you guys following me a little bit on all of this. I know it's a lot of information. It's a lot of new information, but it's really pretty self-evident when you're looking at the data and the structures. But what am I doing? Just on a intraday, hour by hour, minute by minute basis. I'm doing something very, very simple. I'm going to show this to you in gold because it's obviously a much better instrument to show this to you on. Is this. You see how this is a green slope of a moving average? This is the 200 period moving average. This is the 8 period moving average. 8 period is below 200, so it's negative trend. The big trend is negative, but there's a big counter trend here. This is a positive green slope, right? Everybody sees that? And I call that a slice, a trend slice, kind of like a pizza slice in New York City. Oh, you guys want to see? I got a new hat. There was a fair. Let me see if I can get this for you. I really like this hat. Hang on a second. I'll be right back. All right, let's see if can anybody see my New York cap? I got my New York cap going today. So this is a trend slice, right? And what I'm looking for is buying the first confirmation of a momentum move in a trend slice. So for example, I'm moving from red to green. What I want is all green things. I want a green dot, green candle, green slice. I want to be long here, boom. Now I'm going to be moving from green to red. I want all 3 things. In this particular case, I actually don't have it because the way I define all 3 things is I want the slope on both sides of the candle to be red. So I wouldn't have taken this one. I would have taken this one. This is the trade that I would have taken. It would have taken me longer, but I took it. And then occasionally I'll also get the pull away trade, the first pull away trade, and you can take that. But if I have a trade before the pull away trade, I'm happy to take this trade. So I'm only keeping myself to the first a move in the market, the first big move, because that's the highest probability move that I have. And then everything else, I'm kind of just letting it flow. I'm just kind of letting it flow and keeping it being patient. Just being patient and not making any additional trades as I go. Now, first of all, let me see if that's clear to everybody. Somebody give me a yes. That you guys understand what I'm doing when my scalping structure. I'm just literally looking for buy, sell, change of trend moves, and using all of my dot architecture to help me, or infrastructure to help me find the easiest, highest entry possibility. Right? Everybody getting what I'm doing? Okay. And obviously, the extension on gold is just much better than the extension on NASDAQ right now. But I also the dots structure can also be used as a swing trading structure, right? And you want me to see? You want me to show you how I use the swing trading structure in gold? Let me show you how you can do that. So everything that I'm doing on scalping is very, very methodical and has sort of zero room for interpretation. You have to have change of trend. You have to have momentum dots. You got to have everything confirmed, and then you go. Like for example, right now, I'm looking at gold. If there's a change of trend to the green slice, if it's gonna kind of bottom out over here and maybe show a little bit of a upside move, I'm gonna wait until I get green slope, green candle, green dot, all of that, confirming. Only then am I going to take a green trade to the upside, right? Until now, I'm not going to do anything. There's also a secondary possibility. I could have a little bit of a green slice and then a resumption of a red trend. And if I get dots or pull away trades in the red trend, I'll be happy to do it. In fact, of course, the easiest trade in gold has been the big trend, the short trade. All the trend trades have been good, but the counter trend trades have also been good. Why? Because gold is a great two-way market. NASDAQ is a piece of shit right now. NASDAQ is just doing nothing. It's sort of a very dead market. But if I'm going to trade gold on a swing basis, right? On a swing basis, here's what I would want to see. I would want to see the following, and this is where you have interpretive kind of interpretive art in the whole thing. Let me show you how I would have done here. So if I'm trading gold on a swing basis, right, what I'm looking for is a higher white dot. So this is a reversal trade, right? But on a swing basis, I'm looking for white dot here, white dot here. This white dot over here is higher, okay? Where am I? Over here. This would be my entry, okay? Now, where's my stop? My stop would be over here, underneath all of the swing lows. So how do I structure a trade for a swing entry, which is a much bigger trade? So first of all, the entry here would be closed. It closes around 44, right? I'm in at 44. Let's say it's a 45.25, $20 stop. It's a $20 stop, right? I'm entering 45. My stop is 25, right? How would I trade this? So the way I would trade this is I would trade this with 2 units. The first unit, I take profit at plus 10. So if I'm in at 45, I'm going to sell at 55, somewhere around here. Let's say 55, right? And then I keep my stop at the bottom. And what I'm looking for is a 20-point target. So I guess it would be 45 to 65. I would take my second, trade over here. I don't move the stop to break even. I know it's very tempting to move the stop to break even, but if you do, you're almost always going to, get taken out at break even. And if you really want that 1.5 to 1, reward that you're seeking on a swing traded basis, you got to give it room to bounce back. So yes, I'd be in here plus 10, plus 20. I'm out of the trade. Now that trade worked really, really great for me early in Asia session when gold bounced back. I wonder if I think I can show it to you actually. Let me show you the actual trade. It was in my new account, and it was during Asia, so just bear with me. You see, look at that massive, nice. Look at these huge volatility moves in gold. Okay. Yeah. So here's where I look what I just did here. White dot, higher white dot. Stop was underneath here, right? You guys following me? So I'm in at 81. I give up, and this was like a 10-point stop. So I give up 5 at 86, and then 5 at, like, I was supposed to give it up at 90, but I gave it up at 89. And it was a nice, clean. It was actually really didn't take long, like literally 15, 20, maybe even 10 minutes of a swing trade, and it actually could have gotten much more. Now this is a great trade for anybody who likes to be a swing trader. I fucking hated it. I hated the idea of like being in the trade for so long. I couldn't hold on to my stops. And this is the whole point. You don't trade to what you're supposed to trade. You trade to what you are comfortable doing. Because if you're forcing yourself to trade in a way that's not conducive to your personality, you are going to lose regardless. But if you trade that's conducive to your personality, you're going to win even if you make mistakes, because it's going to be much more comfortable for you to be able to correct those mistakes because they're all within your personality structure, right? Does that make sense? NASDAQ with a huge gap up just before mega Wednesday of earnings. Got in a bit late. Could you please repeat the name of my preferred indicator you mentioned? So this is a indicator that I made myself. It's a proprietary indicator. It's only available to people who are part of my coaching. And here's the link if you want to sign up for coaching. It's a great deal because I actually buy you 2 or 3 with the 80% discount for Apex. By the way, my friends at Apex, don't forget, let's get some Apex accounts. I funded yet another Apex account. So this was, now I'm running 5 of them at the same time, very, very methodically, micro trades only. We'll see how it goes. Did I get this trade actually resolved? And I'm nursing my way back to a little bit of more positive structure on this thing. But what a piece of shit trade that was. Anyways, if you want to know, coaching and what I do in coaching and how much fun I have, that's how you get it, because that's the only way you're going to get my proprietary indicator, which teaches you both analytics and trade entry right on the spot, right on the spot. Let me get rid of the drawings. Oops, hang on, cancel. Wait, what's going on here? Remove drawings, and then we're gonna go. So I really like having. Okay, so finally, by the way, what I tell you, I said we're not even going to be looking at NASDAQ until we start seeing pull away trades, and now we finally starting to see a pull away trade. Right here's NASDAQ showing the first possibility that that we have a little bit of momentum. This 850 is the big resist. We chopped around. Are we going to establish an uptrend? We'll see. If we do, we get a chance to trade it a little bit more and see what we can do. See what we can do with the product. But but this was just garbage. This was really, really horrible. I got myself caught in it because I'm a sucker for trading the open, but that is, it's really, really stupid. And the thing is, the indicator was very good at telling you that it was stupid. I just simply didn't read it. So hopefully, as we get better at reading the indicator, we get better at our trading. Gold is just a straight down trend. Now, those of you guys who are trend trading, you could have run this trade for like 20 points. I don't. I take the first trade and then I wait very patiently until I get a change of flow. I'm trading change of flow all day long. Generally, you're going to get a change of flow every half an hour, but sometimes the flow can be an hour and a half. And so if you made money on the first part of change of flow, you just sit around and don't do anything, right? I actually managed to recover part of my losses here by trading the change of flow to the upside. But now I really don't have a trade. It's you got to wait a little bit, see if it establishes an uptrend, and then maybe a little bit of a corrective move, and then maybe another uptrend, and then we trade that change of flow. That's just the way I do it, because I want to trade the highest probability entries, which is always at the beginning of the change of flow, right? At the beginning of a buy slice or beginning of a trend slice. They can see in gold right now, we have a budding formation of a buy slice, right? Slope is teasing us to the green side. Now, whether this is going to be a legitimate buy slice or not, we're going to let the market tell us. But at least we have a chance here to see if we can set up a trade, right? That's what we're looking for. That's what we're trying to get it, right? I did get the reply to the straddle trades. My straddle trades were fine. Apparently, I think what happened was, first of all, NASDAQ absolutely legitimately deserved to get blown out. NASDAQ, I told you, they pulled the prices down, they pulled the prices up, so that was it. The answer to the straddle trades, this wasn't me. One of my customers had sent me the response. It was a situation where you guys did not, or some of you did not set your targets. If you have an open target, quiet. If you have an open target, like in other words, you're putting a straddle. The reason why you put a hard take profit target on a straddle trade is because you wanted to sell it at peak equity. And what happened apparently in NASDAQ is it ran up and then came down so fast that it triggered the floating margin, the auto liquidation margin off the peak equity. For those of you guys, sorry, that was gold. It was gold that floated up and came down and triggered peak equity. So I don't think it really wasn't a situation where one platform did worse than the other. It was just simply improperly setting your stops and targets. I walked you through it. I'll walk you through, guys, through again. I'm not doing any more straddles for myself because I have like more than enough accounts to run, and I'm really trying to focus on not fucking around, like trading the accounts properly so we can nurse them to multiple accounts to payouts, which is much more interesting to people. But yeah, I'll be happy to show you how to set up the straddle, and you guys are welcome to do that. Maybe even on the Fed. It was just too much volatility. Ben says it was too much volatility. Yeah, and Yubi says that you had a target but just didn't fill before the drawdown. Could have been. Was that in NASDAQ or was that in gold? Listen, you're always going to have the whole idea is you're doing the straddle fully expecting to burn the accounts. You're not looking for perfect execution. You're looking to get lucky and knowing that, hey, I'm going to burn the money. That's why you buy them cheap. Clearly, for now, Tradeovate was a better executor. So if I'm going to do straddles, I'm going to do them on Tradeovate for now. That's all. But I'm pretty sure that if you did them on well charts again, you'll do fine. What time do I? So here's the point. The swing trade is on the exact same time frame as a scalp trade. It's just a much bigger stop target. Remember, what I'm looking for is like really interesting earliest possible turns in the market, right? Which the indicator gives it to me. It's just a question of whether it's a turn for a couple of points or a turn for 20, 30 points, right? That's like, for example, you could have done a swing trade in gold over here, right? Here's the same idea as as I'm sort of showing you. So you have a purple dot and a lower purple dot, right? So you could have gone short here with a stop over here and just try to trade price structure. You would have already been target one. Now, could this thing go to 4,000? Probably going to go to 4,000 today. And could you milk it? Yes, you could do it. If you got the personality for it, the whole idea is to trade price structure with dots, which is what every idiot who trades ICT does, but with their bullshit little charts, not with a really great indicator like dots. Like, my indicator is a million times better if you know even a modicum of ICT, which is just glorified double tops, double bottoms, than whatever shit they're doing. We all know that ICT stands for I can't trade, right? That's why you've never seen an ICT trader actually pass a prop test. So my point is, you can employ trade structure. They're big fancy terms for just basically price action with dots and get much better results. That's the whole idea. You don't have the white dots. I don't know why you don't have it. If you should have, if you have BFF dots, if you have BFF dots enabled on trade charts, it automatically sets everything up. Okay, you don't have to do anything in wallet charts. It's already, all the dots are properly attached. So you probably just don't have the BFF dots indicator on this. You know what I want to do? I'm going to change from this 14 account to trade the 18 account, and we'll see if there's any possibilities for us in NASDAQ. But you see, gold, gold is sort of just down, 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 right? We're just simply patiently waiting here. Oh, man! By the way, a lot of activity today in New York City. I don't know what's going on. Must be Monday, but there was like fire from like 6 o'clock in the morning today. Who likes my New York cap? You guys, is everybody digging my New York cap? Are we digging this cap? I think it's pretty cool. Somebody give me a thumbs up on the cap. I feel like wearing it today. So was it 10 o'clock, 10:15? I'm waiting, see, very patiently, because that's really my new modus operandi. I will only take trades on my scalp positions once I get a a change of slice. You have an indicator for. All right. If you don't have an indicator, just email me. Thank you. Thank you, guys. There was a fair outside. I need to put New York, home of capitalism, no communists allowed. I went to it. So, markets are quiet. Let's talk about New York City election, which I think is a really, really interesting bet. Now, I will preface this by saying I could be 100% wrong, right? So this is strictly a spec. You guys, anybody following the New York City election? It's literally the biggest piece of news, of course, over here. You guys know what's going on? We have in the home of capitalism, we have literally a communist, not just a communist, but a fucking dual citizenship communist out of a country that executes gay people, running on a liberal platform, right? Literally like the worst human being in the world. And it's a complete fucking, horror show. Why? Because everybody 35 and under is a complete moron. I mean, that whole generation, as far as I'm concerned, should really have been aborted. They just really the stupidest people alive at this point. But they all love his promises of free buses, free rent, free grocery stores, because their life is so hard. Mommy and daddy's trust fund is just not enough to pay for their apartment. Anyways, here's the interesting thing. We have a three-way race. It's very complicated. Nobody's excited about the competition. Andrew Cuomo, who's the former governor of New York, kind of doesn't have a lot of energy. He's got a lot of baggage behind him, so nobody's really loving him. But we've gotten to the point now where I think everybody in New York is kind of scared straight that this stupid fuck is gonna win based upon the enthusiasm of young people. But here's what people don't understand. They've been posting for the last 2 days that the early voter turnout, and by the way, I have never in my life voted early for anything in New York City. And I ran to the polls yesterday to vote for Cuomo, right? And they all think that early voter turnout is super great news for him because people are so excited to vote for him. And my argument is that nobody fucking goes out of the way to vote for somebody. People only go to early voter turnout because they vote against somebody. You're only motivated to do something that is just, out of your way and is a pain in the ass because you hate to do something, because you're seeing a threat. It's an existential threat to you. It's not because you're out of love and dear expression of the dear leader, right? Not to mention the fact that as I'm walking towards the polls, every 35 and under idiot is sitting there having mimosas for brunch, completely complacent in their belief that he's going to win. Whereas I get to the polling station, nobody is there younger than me. It's like just old ladies and old men. Do you think those people are going to vote for that fucker? They're all voting because they all own real estate and they're scared shitless this guy's going to bankrupt them. So my argument is Cuomo is 7 bid, 93 offered on Kalshi. This could be one of the greatest trades ever if I'm right. If Cuomo wins simply because the actual turnout is 3 times the normal size, which means everybody who didn't vote in the primary decided to vote for him just to stop this asshole from becoming a mayor, it's going to be a complete change of what the polls say. And that's what's so fascinating. So that's sort of my riff today on the New York City election and trading. It's obviously, the risk reward is amazing. It's basically 10-to-1 risk reward ratio at this point. So I leave it to you guys, but that's kind of my analysis. I think what's happening is that the incredibly high voter turnout is not because they love him. It's because they hate him, and everybody's voting early to make sure that he gets that, right? Um, no, you can't have another. That's right. It's going to be another fucking Dearborn. You're right. Um, and that's the other thing is, all these young kids, they're so stupid. They're so lazy. They're so useless as human beings that I guarantee you, they love to virtue signal and say they're going to do it, but they're going to have. It's going to be too late, or work is going to keep them that, or they're not going to be able to. They don't want to wake up at 6 o'clock in the morning to vote before work. I really think that the enthusiasm. That's why the Dems always. Anybody who always depends on the youth vote always loses because the youth don't vote because they're lazy motherfuckers. So, anyways, I know I sound like a cranky old man, but man, I absolutely hate. I hate every young Gen Z person except the ones that are normal. The heteronormal ones I like, but everybody else I just despise them all. They're the worst generation ever, in my opinion. Anyways, nothing going on in the market for us to do anything. Although finally, Nasdaq exploded to the upside. So like now would have been the time for us to begin to get interesting. Now we have range expansion. Now we have pull away candles. Now the dots indicator is telling me, okay, we can get interested in the trade. Look at the ratio of volatility. It's 90 ticks, 9 points in gold against 15 points in Nasdaq, and Nasdaq is 6 times the size. In order for this to be equal, 9 times 6 is what? 9 times 6 should be 54. It should be 54 point averages, and this is like 1/4 of the volatility. 1/4 of the volatility. That's why gold is the trade. Oh, so I actually my bad. I probably should have traded this, but I think we still could. Let me zoom in on this because I was just kind of riffing and I wasn't seeing. You see that we have like a little bit of a green slice. We had a change of pace, and a resumption of pace. Could I have traded this down? Here this would have been a big vol trade, so it wouldn't have been worth it. But if I get a pull away trade from here, like a purple dot, a pull away trade here, that would be definitely worth it because it's essentially an extension of we have a little bit of a green pause and a fresh new red slice. So we'll see now. We'll see if it happens or if this is basically all she wrote. If we're going to start, we'll be finding a bottom in front of the 4,000. My vibe says that we break the 4,000 today. I say that we break the 4,000 because gold has just been so strong. Profit taking is there. There's a lot of stops underneath there. It's just too tempting for the dealers to want to run this. They just wait. They're just biding their time, trying to see if they can exhaust the buyers, and they flush it. They're going to flush it like, it's going to go to like 39.50 in 20, 30 minutes if they flush it. Which is why if you have the patience to trade the swing trade, remember this is the swing trade setup, right? 1, 2, lower purple. Lower purple is your entry. So I'll make it an entry by just simply showing you. This is the entry, right? And now you're holding against this stop. You're already at target 1. You probably could be almost at target 2. Let me see, 39 against 60. So let's say it's a 20-point stop. You're in at 29. So you take that, and then what's 30? It's 19. So yeah, you would already actually completed the swing trade. I'm going to call out the swing trades during the session for everybody who loves to do them, and you guys are welcome to coattail off those things. But I'm not going to do them myself just because I realized I know what I'm good at, and I'm good at scalping. But you guys are you guys could be good at swinging. So how's everybody else doing? Did you guys have a good time on Friday? Did anybody get funded? Are you guys running your funded accounts at this point? Everybody having a good time with? Oh, I got to put up my. Hang on a second. I totally forgot. I killed my Apex. I've been trying to do this new thing where I don't have a permanent banner because it's annoying. But then of course I have to, keep the banner running. Now watch this. Like, remember I told you, I said this is a pull away trade. We want to get involved. We are going to get involved. I'm just trying to figure out which account I want to put this into. Hang on, let me go to Trade Abate. I still want to run this account. I want to run the 8 account. So we are going to Trade Abate. Yeah, we're in the 8 account. Okay, so we'll trade that. $1.21 on the clock. So it's quite a while. I'm going to be very patient. The fact that it's purple now doesn't mean it's going to stay purple. So if it does, we're going to trade this. $1.08 on the clock. Trying to stay patient on this. $49 seconds. We're look at this. 407. We're breaking the 410s. Right? It's really starting to move here. And also, Nasdaq is turning red with a red slope, so that's going to be a trade for us too. But first, we're going to do gold. We're going to give it like, T-8 on the seconds. Get a little bit early. All right, we're short this on gold, and we're done. The gold got done. Now we can go to Nasdaq and see if I can get on that thing. Join ask. All right, and I'm in Nasdaq on a short trade because again, red slope, red candle, red dot, a change of flow. It's just a change of flow trade, right? So let's see if that works for us. Which account is this? That's the 18 account. Okay, good. So this is the 18 account. Oh, am I trading the big one? No, I'm trading the micros. Oh, I'm on a 3 lot. I'm like, why is this trading so large? Okay. Well, we'll see. I should be trading 1 lot. Sorry, I'm trading a little too large on this account, but it's still micros, which is fine. Let's see if this works. But the gold trade was super clean and easy, right? You could just see that it was falling. We took that nice clean trade. On the Nasdaq trade, where am I in? I'm in at my 18 position. I'm in at 42, and I'm targeting 32. So let's see if that works. You see how much less interesting it is to trade a low volatility product, for the kind of stuff that we do. It's just boring as fuck, right? Gold gets done in a minute or two. And even when gold, goes against you, you can make the money back really, really fast. Nasdaq is just, all right, we're looking for the 32s. It kind of drop 34s. Let's see where it's going to be. And we're done. Nice. So that, that trade worked. It's too big a size, but this is the beauty of micros. Even when you're big size, you don't really overextend yourself. There was nowhere near where I was, going to endanger this account on trading it. But still, that was a nice trade. Anybody take that trade with me? Why was the second purple dot the target? Because it moved away from the moving average. Sorry, no. Why was I trading this particular trade? Why was I making this trade? Okay, so I think the question is, why did I make this trade in the first place? Okay, it's really hard to see, so I'm going to go big scope here. I think I need my magnifying glass because you almost need the magnifying glass. Do you see how we went from red to green here? Like a little bit of a pause. Remember, we're always change of slices, right? So red to green means that this is literally a fresh red slice, right? A fresh red slice, right? Fresh red slice. Now, it was doing during 10 o'clock, lots of volatility. I didn't want to take the trade here on fresh red dots and big volatility. But I said if we start to pull away from the moving average and actually produce a pull away candle, which is what we did. A pull away candle is one with a dot that pulls away, that tells you there is strong momentum towards our way. Now this was a massive candle, so there wasn't going to be a lot of juice left on the stone, but it was enough for us to make the 2 points. We got short, boom, makes it 2 points, and it was a great entry for the trade. That's what we did. That's how the whole thing worked. I forgot the magnifying glass looks really, really good, right? Yes, the small pull away candles look, definitely work better, but this was still within, the whole idea is, this is the, again, let me go back to my magnet. Now that I found my magnifying glass, I'm never going to let it go. The reason why I was comfortable was because this was the first pull away trade in a fresh red slice. Now it was a tiny, tiny little change, but it was nevertheless a legitimate fresh red slice, as it was going, right? So here's a good example where it doesn't work, but the reason why it doesn't work is because that's 9:30 in the morning, so you would have never traded this, right? But there's lots of examples, let me show you, where you want to trade the pull away candle if you got it. Like here's a good, this is one I traded. Shit, where's my thing now? Oh, here we go. Look at this, change of slice from green to red, pull away candle. This is like $3 worth of trade here. If you short here, boom. You made a lot of moves here. Same idea over here. Like I can just repeat this. The whole idea with my setups is they're simple, repeatable, and profitable. Change of trend, pull away candle, you short over here, boom, right? It's the first one that gives you the highest probability. Now, yes, you're gonna have 3 or 4, sometimes it's 5 follow-ons, but you're always gonna have the first one if you want the highest probability. So does that make sense to everybody? Everybody vibing what I'm telling you here? Are we clean and clear? All right, let's go back to see what NASDAQ is doing. The double screen. Do you guys don't you like the new layout where you can watch NASDAQ and gold side, side panel by panel? And it's pretty clear on the charts, right? I could make even the chart a little bit bigger if you guys want me to. Is this clear enough, or do you want me to make it bigger? Because I can do that too. Excuse me. It's big enough, right? Okay. Ben says he's been doing that for weeks. What have you been doing for weeks? What have you been doing for weeks, Ben? I forgot to actually turn on comments today. Sorry. No, vertically sucks. We don't have any room vertically. That's why horizontally is much better. First of all, you see the back action, which tells you where the support resistance are. And secondly, you're not squeezed like a sardine can in a New York City subway. No. Vertical is stupid as fuck. It's horizontal we want to do it. Oh, 2 charts on the same screen, like this, like this horizontally, the way I said. Because vertically it was just too tight for me. But horizontally, I like to see the past history because it gives you really good context of what things are going. Look at it. What I tell you, 402. So did we break the 400? We did. We broke the 4,000. That was the easiest call in the world. Anybody take the swing trades, by the way? Anybody do the? I'll start calling out the swing trades the more we trade. This is clean and clear. By the way, if you want to trade the swing trade in NAS, so here's the swing trade in NAS. I'm gonna start marking them up. So we got a white dot here, and I got a higher white dot here, I believe, right? So it's not unreasonable if you think NAS has a little bit more upside. And the big thing is, first of all, the white dot's got to hold. So far it's not holding, so it's not even a trade. But if I have a white dot momentum that tells me, okay, maybe there's a little bit of some buying power, not ready yet. There's no signal yet. We just got to put that into staging territory. Put that in inventory. I feel like I'm playing like Risk, like that military game where you just move pieces around on a chessboard. It's really like, I was walking around, I was thinking to myself that trading is just a game of buying and selling. Once you understand it's a game of buying and selling, it becomes really easy to understand it, because you have these buying slices, selling slices, and momentum dots that go around it. I think I need a New York pizza slice as part of our educational component to really make it clear and understandable what we're talking about, right? Oh, you can't see what I'm doing? Comments are in the way? All right, sorry. All right, we'll get rid of it. No problem. Comments are gone. Sorry, you're right. Comments are gone. I'll just put the big comments on. I wish there was more, it would be really great if StreamYard let me have comments on where I am sitting over here. I wonder if I could, I'm going to try and see if I can use any of this empty space, this black space that is always permanent for stuff that we could move. Schultze, thank you so much. It was Schultze who showed me the Tradeovate layout. This is so cool to be able to have all your accounts on Tradeovate on the bottom like this, so you can totally see how you're doing on the P&L. It's really, really nice. And we're going to just let it grow. Yeah, on YouTube you can pop out the comments if you need them. Yeah. No, I'm talking about from the StreamYard functionality. So $1.43 on NAS, right? And if this white dot holds, that's a legitimate swing trade for us. Like that would be, we would be here, higher whites, right? We'd put a stop right underneath here around 790, which is like about what, a 70-point stop. First target is 35. Second point is 70. Maybe you can even try to go. Second target is 100, and just see if NAS cooperates and it moves that way for you on a swing basis. It's really, you can really once you begin to see the development of the price action, it becomes super easy to see these setups. In Tradeovate, how do I get that screen? Are you talking about, this is my Tradeovate screen. All I have is just the MNQ and MGC ladders and this thing. That's all. You can get everything from here. These are all the drag and drop pieces, just like well charts. You just drag and drop them into the thing. I just dropped two things, that's all. And it's connected to TradingView, and I'm basically trading on TradingView, and that's it. Nothing complicated. All right, yeah. So NAS is definitely a swing, a swing trade in place with a stop like right underneath here, around the 90s, right? So if you guys want to play, that's the play you want to make, right? Double arrow means that we have a trigger. Now this gives you, people who love to swing trade, you obviously have a lot more room, a lot easier stops. You could maybe even buy one and then buy one down because you can average into a position. It's just, and I'll go through this in coaching. It's just this sort of like half exit, full exit structure can take a 50-50 trade, like can take essentially a break-even strategy and turn it net positive. And I'll show you the mathematics of that in coaching. If you guys want to do coaching with me again, this week. Don't forget, here's the coaching link. Come join me in coaching. I'll buy you a couple of free accounts if you join me now, because I think this thing, what is it? We have like 2 more days before the 80% goes away. So I'll be happy to get that deal for you. Okay. Oh, shit. We actually have a scalp condition in NASDAQ. Let's change accounts. 19, join bid. Okay, I'm in 19. Why do I have a scalp condition in NASDAQ? I have a scalp condition in NASDAQ because we had a white dot, green slope, green candle, right? And the target here is 74.5. We're trying to hit 74.5. Let's see if we can do it. Here's my position. I'm at 64, looking for 74. How high did this go? 73.50, of course. 1 point away from my target, and it does, it kind of died out of me. But it's fine. This is a decent looking setup. We'll see if NAS wants to cooperate. Hopefully it doesn't die out on us, but I do think, it feels like they want to lift it. Feels like they want to run this to 26,000. Equities just Tuesday at midnight. Thank you, Laura. So we got like another day. Don't forget. Get the get my coaching, and I'll be able to get it for you. You guys will be able to get the accounts for free. $74.75 is a target on NAS. Oh, beautiful. Beautiful. Only one fuck up for the day. That's really not bad, guys. Look at this. Just one fuck up for the day. And, that was completely self-induced. But all 4 accounts are positive. And the gold accounts are really good. Gold, I was much more disciplined in gold. And also, obviously, gold is just a much better product. I'm going to try to run this to 26,600. Try to run this to 51,500. And, we'll see if I have time for the rest of the day to actually trade. But that's the idea, is to make $100 in each one of these accounts every day, grow them, and then hopefully they all go to target, and that's how we do it. Nice and clean. But that was good. The trade was validated by the setup. Hopefully you guys anybody hit that trade? Anybody made the trade? Yes, no? Let me know. Yes, Jim Tango. Jim Tang. And UB1. And Clean Sober. Nice. And Crazy Wally. Man, I haven't seen you in a while. Good for you. All right, guys, good session. We did a good job today. Come back tomorrow. I think Wednesday, Wednesday it doesn't behoove us to trade morning because we got the FOMC. So I think I'm going to trade FOMC Wednesday morning, and then maybe we'll do marathon Thursday. Maybe he'll say some shit that will drive the market crazy, and we get some volatility. But yeah, honestly, for gold, any day is marathon day. Gold, I could trade gold with you 24 hours. And have fun with it. It's just a matter of carving out time. But yeah, tomorrow just regular time, and then Wednesday we're probably going to trade the FOMC. We're going to trade the end of the day, not the beginning of the day. It's not going to. It's always really a disaster trade the beginning of the day in gold. Anyways, I hope you guys starting to see the nuances of the dot trade on the scalp side, and also, by the way, on the swing side. I mean, I wonder if is anybody running the swing trade. Anybody take the swing trade that I showed you guys? I'm just really curious. So, John, Mr. John, Bob Jim, Mr. John, Bob Jim. Okay, come back tomorrow, John. All right. Hopefully you come back tomorrow. Love to know how it went. Let me know. Let me know how it goes. Because I'm telling you, dots beat ICT any day of the week. You know, any fucking day. I'll put up dots against ICT and every moron that trades it, especially because they're all like 12 years old and really don't know anything about price action. Any time of the day. Swing it in the MES. Okay, yeah, it's probably the same structure. But let me know, let me know how you guys do it on that. And then we're going to talk a lot more about that in coaching. Okay. All right. Thank you so much, guys. A lot of fun. I will see you guys tomorrow. Everybody have a wonderful day. Take care.